The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 4th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't call in, well, let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and of course inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading at 24,437. That's up 206 points. S&P is up 14. NASDAQ 100 back 16 points. 63.21 is her print. Russell's up 0.5% or 8 points. Semis are down 1 4/10%. 18 points to the downside. New York Stock Exchange up 84.7%. We're certainly going to look at that. We'll probably look at each of these. The trannies are the ones that are moving the most, up 2.5%, 249 buckaroonies. We're going to pay attention to the spot VIX index right now, trading at 1042. We'll go find out where that 50-day exponential moving average is, because that will go ahead and at least provide you with an important indication as to where the S&P 500 is headed to over the short term. Gold's back $6. Silver's back a nickel. Light sweet crude is up 73 cents. And that's really where our first request comes from. You got light sweet crude trading at 57.65, and the question was if I would just take a look at it. Really, I think that was the question. And to do that, we're going to look at really two different charts out here. Really, I guess we're going to look at 5 different charts. This panel here shows the 4 different time frames where we're taking a look at our TAS market profiles. 60-minute, 240, daily, and then on the very right-hand side is the weekly time frame chart. As I look at this chart, to me, the most important time frame is the daily right now. And the reason is, well, one, price is up towards the top of its daily profile. Let me see if there we go. We can expand it a bit. I'll go ahead and turn price off. You're going to say to yourself, why would you turn price off in order to evaluate what light sweet crude is doing? Well, because it becomes very easy to take a look at this current daily profile, and that is providing you with a bunch of key information. You'll see that the cyan color is closer to the top of the box. That's red. Look, on some of my charts, I use the same color for each time frame. This one here happens to be multicolored out there, just to keep you on your toes. And if we take a look at the bottom of the box is green. Again, cyan color, the center line of the box, not anywhere near in the center, but closer to the top. That tells us that the significant resistance area is 58.27. Well, if we go ahead and put price back in, we're trading right at about 58.27 as we speak right now. We're actually trading at what, 57.62. So in order for light sweet crude to continue moving higher, it needs to get above that resistance level, a close above it. Hey, there was a close above it by a couple of pennies on Friday. That didn't seem to do very well. Well, you really got to close above it, not just by a penny or two. So now, the bullish side is you close above a significant resistance zone like this. Now, support in light sweet crude is 55, 54 on the daily charts out there, but price has never really explored that area, and it really should have over the past 4 sessions out here because of the structure of that bearish profiled box. It hasn't. We can see that we have 1, 2, 3. Today is the 4th higher low out here, so 4 days in a row. So we're going to have to call this a Light Sweet Crude doesn't know what it wants to do. Now, why would Light Sweet Crude not know what it wants to do? Well, if we take a look at, where is that chart? Where did, must be on a different page out here. That's okay. Takes me just a minute to, we're going to look at the weekly. Oh, it wasn't. Son of a gun. Let me go back. Sorry about that. I will get my act together. I promise you. Here comes the monthly chart for Light Sweet Crude. So here's what we know longer term. And it's important to understand longer term what the market is doing, where is it headed to, and that way you can navigate the shorter term time frames. This could be weekly and daily and other intraday time frames. So when we take a look at this chart here for Light Sweet Crude, makes the type of bottom that we like to see. Price moving lower, doing less relative energy. Made a TD9 count as well on a monthly time frame. And you're going to see that TD9 count, the importance of that is that's where the beginning of resistance really is, this little green dash line out here, right at about the $60 area. Maybe it's 59.70 or somewhere right in that zone. That's your significant resistance. The way you would interpret this chart, if Light Sweet Crude can close above that daily set of profiles, if Light Sweet Crude can close above this green dash line, now this is the continuous contract. Really, in order to show the monthly information, that's what I would have to do, on top of the mere fact that I've got an issue with NinjaTrader knee signal at this stage here because of the way that they have now gone ahead and labeled the 2018 futures contract charts. Hopefully they'll resolve that soon, but that's neither here nor there. What this shows us is if, in fact, price can get above those areas, well, then Light Sweet Crude should move quite a bit higher. Quite a bit higher. Where? Let's just take things one step at a time. Let's first get above resistance before we come back to that. So that is looking at Light Sweet Crude. Now, with regard to the daily equity contracts out here, one of the things that I mentioned, one of the things that I believe you should be watching is going to be the spot VIX index. Let's do this by taking a look at these charts. And as we speak right now, what we can see, and let me do this here. Well, let me do this. Let me come over to this chart. Let's see if I can do it a little bit better. What we're going to, this chart, at least we have this is a little bit larger than the one that we just looked at. So you're going to see that the 50-day exponential moving average is 1055. You want to watch 1055 today. If it does not act as a support level, then what you're going to see over the coming days, you're going to see the you're going to see the spot volatility index get down to Stevie's blue line out here, and that's about the 951 level. Now, if price continues to move below the 50-day exponential moving average, what can you anticipate? What should you expect in the S&P 500? The first thing is don't go short. Please, don't go short. Because what price is going to do in the S&P 500 is to continue moving higher. So the key level, what are the key levels to be watching all day? Just one number, just like Curly in, what was that, City Slickers out here. It's no more slick than this. Watch that number, 1055. You close below that, spot VIX index headed to 951. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow's up 200, S&P is up 14. The question came in, well, then where is it that Light Sweet Crude, if it breaks out, will head to? Pretty easy to figure out. We would just simply take a look at the A to B equals CD pattern. That now, in one sense, you could say we already have a confirmed A to B equals CD to the upside, but price needs to get above those resistance areas that we talked about. Now, the price projections here, and this will be a good lead-in to what we'll look at next in Light Sweet Crude, would be 71.24. That's your 1-to-1. Now, the way that things stand right now on December the 4th, that would not be my call as to where Light Sweet Crude would head to if it can continue to break out. Instead, I would tell you 79.18 or 89.27 out here. And that's because we have seen a very small retracement on this monthly chart. This is longer-term view that you and I are taking a look at. That could set up a Gartley sell at one of these levels, 71.25, 79.18, 89.27 as well. So longer term, that's what Light Sweet Crude wants to do until it provides you and I with some additional information. We talked about how the transports are the biggest winner today, percentage-wise, up 272 points. And what they have completed thus far is the 1-to-1 A to B equals CD. We talk about how the Dow Transports formed this beautiful Gartley buy pattern. And it did that when it created this nice little bullish candle out here. This is on the trading session of November 16th. Nice little bull separating line out there. That's what you need. Price is a daily chart we're looking at. Price gets above Stevie's red line a couple of days later. That's a positive. And the ultimate outcome of any Gartley buy or sell is that it turns into an A to B equals CD. Well, some people out there might say, aha, this is a market top because the transports are going to go ahead and lead the Dow and everything else, and they just completed a to B equals CD pattern. I would say, don't go there. That's not the case. Did it complete an A to B equals CD? Most certainly did. But is it going to move higher? The explosion off of this C to D leg out here is huge, gigantic. I mean, it is powerful. That tells us that what we are going to see here is more than a 1-to-1 move before it starts to back off. That means you're looking at 10,781 as its next target. Does it have to stop there? Absolutely, positively not. It could be targeting 11,151. But the next area where the transport should be headed to is 10,781, give or take a few shekels out there. So nice and strong and leading the markets higher out here. And I don't see anything at this moment that's going to get in the way of that continuing to move higher. Now, what are the markets doing? Where is the next potential short-term top out here? And I would say if we go back and we take a look at this chart here that we began with when I was going to take a look at the spot volatility index. Well, first of all, when we take a look at New York Stock Exchange, NASDAQ Composite, and Dow, we can see that the bottom panel there, that advanced decline oscillator reading, each are above zero. When it's above zero, tells us that buyers are the ones that are in control. Even with Friday's action, even with Thursday's action inside of the NASDAQ out, it was really primarily Friday's action. Yeah, at the end of the day, this tells us that it is buyers that are in control of the market. New York Stock Exchange, we had nice gaps to the upside in the Dow, inside the New York Stock Exchange, and several of the indices. Where the New York Stock Exchange is likely headed to, or at least its advanced decline oscillator reading, is this plus 150 level. You know that when price got down to that minus 150 level, that was November 15th. You and I, we were looking for a bottom. So much so that we went long on November 16th, just simply because of what happens at that minus 150 area. Now, that was coupled with a couple of other patterns out here. Now, the reason why we're paying attention to the plus 150, we're nowhere near it right now. It looks to me like that's what it wants to do. Doesn't have to, but right now, this is what I'm anticipating, that we're going to see New York Stock Exchange push up to that level. If it gets above the plus 150 area, that's what gives us the hope and promise, not the guarantee, but it typically works like this, the signal that higher prices are to come. Doesn't have to be the next day, doesn't have to be the next week, just simply that the move higher, the interpretation, it is not over. If it turns down below the minus 150 or the plus 150 level, then we have to take a look at some other things that are going on inside the market at the exact same time. But it looks like that is really what it wants to continue to do out there. What else is interesting as we take a look at these charts from around the globe out here? I'll tell you what's interesting to me. I don't know how the day is going to end. But let's go take a look at a couple of hammer candles out here. Let's look at the one right now inside of the XAU. Again, I do not know where this is. If this was just about to be 4 o'clock, we'd tell you that you have a completed A to B equals CD to the downside in the XAU, and that we had price moving lower, less relative energy, both of which would have completed if, in fact, today is a hammer candle. What does that mean? Do you go along the minors at this stage? Well, you and I know that, just as Dave Mason knows, that we really need some additional confirmation. That additional confirmation would come if, in fact, tomorrow price were to assume you get a hammer candle today. Price would close above Stevie's red line. That's at 79.53. I don't know what the number will be tomorrow, but it's going to be somewhere right around there. Then you could say, okay, now we might have action. And of course, you'd want to go over, take a look at gold, see if it's giving you any kind of a bottoming signal. If it hasn't, then you're in a quandary. What do you do? Because are the miners likely to keep moving higher if gold is not moving higher out there? Well, you'd have to answer that question. But right now, we have some, that's at least two completed patterns. I don't know. Let's go look at the wave counts out here. No, you don't have it there. Let's see what kind of wave count on this seated. Oh, how does that work? Z, are there coincidences out here or what? If you take a look at this C to D leg out here, and what I'm referring to in this A to B equals CD pattern, how do you like that? If you take a look at coming off of the October 10th swing point, that's what created your C to D level. Well, today just happens to be a seventh wave move. Now, that can extend itself. But how cool is this with regard to looking for signals in the market here for potential bottoms? Completion of the A to B equals CD pattern. And I say completion only dependent upon what today's candle session is. Price moving lower, less relative energy, dependent upon today's candle session. And you have wave number 7. So if, in fact, this is a bottom, we will see that candle remain as a bullish candle. And we will see then price close above Stevie's red line. That, my friends, is a gift to everyone out there. That is Santa. He just gave that gift to me. He gave that gift to you. So this is an area that you most certainly want to pay close attention to. Now, I said hammer candles. What other hammer candles can we look at out there? Well, you and I can go start looking at the week indices out here, the so-called rotational or rotationing out. That's not even a word out there, but you know what I was saying. And that would take us to one of those indices, which are the semiconductors out here. And what the semiconductors did earlier in the day is they got down and tested Friday's low. Why is that important? Well, muy importante, because Friday was a hammer candle. Now, what a hammer candle is doing, this is not near the completion of any pattern. That's the bummer here. The only pattern that I can find inside the semis are that they came back to support. They came back to support of one of those Tom DeMark support line areas. Hey, that's not too shabby. You tested a hammer. It sounds to me like the semis are done moving lower. Steve Rhodes, TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So So as we take a look at the semis, now the cool thing about that hammer candle, we'll pull that chart back over here. The cool thing is that you know the rhyme. If you close below the low of a hammer candle, well, if you're long, you're wrong out here, and that would then suggest that price would begin to head lower. Now there are some other red dash lines out here. You can see about the 1187 area, somewhere right around there. So there are some other support areas. No pattern to give you or I the indication that this is the bottom, other than the fact that it's hit support. Now you have a test thus far of the hammer candle, so that is somewhat helpful to you and I. If we looked at the SMHs and went to get some volume out here, number one, the reason why you want to, in my opinion, why you want to take a look at the indice versus the ETF as well, the so-called underlying instrument, is because it can provide you with more information. In this case here, it does. Here's the semis. You can see Friday's candle session on a daily basis was not a hammer candle. So if you were only paying attention to the ETF, to make some type of determination as to how the market was walking, talking, and squawking, you would have missed the old squawking and the old talking out here. With regard to the daily time frame, you'll see there's no profile that provides us with any support. That's the very left-hand panel of the screen. On the weekly chart, though, you do have some support down at 95.62. So if price did close below the hammer candle, it's also telling on the SOX itself, telling you that support is not too much further below out here. So if that's going to, again, these are the weak links inside the market that you and I are looking at, because we want to try to figure out, we already know what the message of the strong links are. They continue to want higher price out here. So what's the message of the weak links? Weak links such as the NDX 100. If we take a look at the NDX 100, we pull this over here. What's its message? It certainly needs to close above 63.98, Stevie's red line, to get back into favor of the bulls out here. But if we take a look at now, here's where we're going to flip back and go take a look at the Qs. In fact, why don't I just look at this on a weekly time frame? Forget about the daily time frame. Let's go look at the weekly time frame. Why would we do that? Well, first of all, we're going to go ahead and turn off these profiles. We're going to clean up the chart a bit, and it's because of the phenomena that is associated with this ETF, specifically with this ETF. Now, what is that phenomena? There are just two things that are turned on as we take a look at this screen: the pricing area of the Qs and the volume pattern down below. And this pattern has been around for a long, long time inside of the Qs. Why? I don't know. We don't need to know. What we do need to know, though, is that the Qs make lows with volume. That's right. Absolutely correct. And you don't have to believe me. You can go take a look at the chart yourself. You do it on a daily basis. It's also clear. But this way we can go ahead and put some. So take a look at the highest volume bar since 2013 on this chart out here. And that was on August 24th, 2015. Volume there was 449 million shares. That, my friends, was a bottom. You just go take a look at other swing points with that form bottoms, such as February 8, 2016, 350 million shares. Again, a high volume bar out here. And again, these swing points, you just take a look at June 26, 2016, high volume bar, 315 million shares. Well, what was last week? 294 million shares. Nice volume out here. Looks like another potential low. But what's going on inside of the, where are the bottoming signals if, in fact, that is occurring out here? Well, the bottoming signals that I would be taking a look at, that I am taking a look at, that you're now going to take a look at with me, one of the first things I take a look at is, hey, what's going on a short-term basis inside the NDX 100? Because you and I can go take a look at its TAS market breadth. That's the green line. This is a 1-hour chart. The green line represents the number of stocks that are trading above the top of its profile. When you trade above the top, you're eliminating one side of the trade, and that would be the short side of the trade. So we take a look at these crossovers to help us understand what's really going on underneath the covers. Well, you have 40 issues trading above the top of the box, 33 trading below. It's in the bullish configuration, even on the short-term chart. You had a little kiss and tell earlier in the day as price was careening lower out here, but it was nothing more than a touch and go, and the go was, hey, I'm done going lower, at least for the time being. If I go ahead and show this on a 4-hour basis, no big deal out here. Bullish configuration, daily basis, bullish configuration, weekly basis, bullish configuration. So we're seeing that market breadth on all 4 of these time frames is bullish out here. So that's an indication of a potential bottom. It's only one indication. We have to look further. We have to dive down further. And to dive down further, what we've got to do is start taking a look at some intraday time frame charts. Well, if we go take a look at the 30-minute time frame chart out here, I don't really have a pattern other than the mere fact that it made a higher low than Friday's washout. So made about a 70, looks like about a 0.786 retracement. Don't quote me on that, but visually that's what it looks like. Either way, it's a higher low that is out here. Now the question is, can it make a higher high? Well, first thing on a 30-minute basis, you know and I know, that sounds like a Dave Mason tune, price needs to close above Stevie's red line, 63.26, give or take, and some change out there. So today, during the next half hour, hour or so, if price can close above Stevie's red line, well, then that's another chink in the armor for possible low out here. If we go take a look at the next time frame, or the next time frame that I'd like to look at, is the 2-hour time frame. Now, in the 2-hour time frame on Friday, we saw price move lower, and that was into the 12 noon time frame. And then by 2 p.m., you had a nice little bullish reversal candle, the old piercing candle out here. So now we've got a, we do have a bottoming signal. That low, and we do have a higher low out here. Now on this time frame chart, we also know that on the 2-hour time frame, that price got down to support. I mean, probably to the tick or very close to it, a 62.75 level happened to be the bottom of a TAS daily profile. Let's go switch over because it's going to be maybe a little easier for you to see here. I'll go ahead, and sometimes these black background charts are easier to see, sometimes not. But what we want to be paying attention to here, you'll notice that the current 2-hour time frame profile has a bearish structure, much like we looked at with light sweet crude on the daily basis. So what this tells us is that in order for the NQ to confirm that in fact Friday's low was the bottom, you would need to see price close above the top of that box. Now, it's 63.62 and change. The problem is another 2-hour profile can form out here between now and when I next see you. But right now, we've got to go with what we know, and it doesn't get confirmed or turn bullish until you see it close above resistance. So the key level isn't, hey, can it get back to its highs? It's, hey, can it close above 63.62 out here? But we've got signals. It's got all the makings, the daily chart, back into its profile level. It needs to close above 63.85. If it does that, then you're looking at price heading back to the 64.29 and change level. That's courtesy of the NQ. Steve Rhodes with TFNN. Dow's up 205, S&P 14. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's up 201, S&P 14th. Not really any big change there. You know, we talked about the XAU out there just as a guideline as to what the miners might be telling us to do. So let's go look at the GDX, and then Tarpon 2 wants to take a look at the XLP. So we'll do that as well. If we take a look at the GDX, just kind of curious as to its volume pattern out here and see if there's any profiles. So right now in the GDX on a daily basis, you're testing the swing point from November 3rd, 34 million shares. You do it on light volume. So you combine that with what you and I looked at on the XAU. Depends upon the candle it forms, and I don't know whether it will be a hammer or not today. But that was going I guess as long as it can close back above 2222, room 222, that is a positive. You're at 2229 as we speak. You're in essence at the bottom of the weekly profile, but equally distributed there, so it doesn't really give us a leg up other than to say it's down at about the support level. So that is, in fact, what's going on inside the GDX. Tarpon 2 inside the Tiger's Den wanted to take a look at the XLK, and it's a great trade if you are in the XLP, my apology. That's a great trade if you are in the XLP, and the reason why it is a great trade is because it made two beautiful Gartley patterns, one on the daily, one on the weekly. Here is the weekly. This is a longer-term view out here. And you and I looked at a daily Gartley buy pattern inside the Dow Transports. You and I are anticipating that the XLP is going to behave the same way out here. Now, the Gartley pattern was when it formed this little A to B equals CD pattern. The A point was out here in the trading week of June the 9th. Your B point was this hammer candle on July 14th. Makes a retracement into the August 18th level. Busts through the hammer candle, and it makes a low on the trading week of November 10th. That trading week low also created a nice little three-river morning star candle, the bullish reversal signal at the completion of the Gartley buy pattern. Then what does price do? It gets above Stevie's red line. This is a weekly chart we're looking at. Getting above Stevie's red line while the price oscillator is zero is really what you'd call supercalifragilisticexpialidocious bullish. out there. It doesn't get any better than that. That is why subscribers and I went long the XLP. I mean, it gave you everything that you could want Tarpon to. Now, where the XLP is headed to is at least 59.81. It's going to take out its previous highs at 57.36. Now, I can't guarantee you this. What I can do is say this is exactly what the chart patterns look like. And 59.81 is an error. It's really not headed there. That is the 1-to-1 A to B equals CD. But the strength of the move that we have seen thus far says that where the XLP is headed to is 61.81. Now, we've got time before either of those are hit. And, in fact, price has to first take out the swing point from 57.36. But XLP looks bueno out there. So if you're in that trade, XLP, nice job and best of luck to you. That's really about all that you need to know. No reason for you and I to go any further at this point in taking a look at the XLP. If we look at Goldilocks and try to figure out what in the Sam heck gold is doing out here. Now, in this case, again, I've got to take a look at the continuous contract because of the issue with e-signal and the way that they went ahead and changed the futures contract numerical system, so it screwed up my other charts. But that's okay. We're good. Now, the problem here is what we really need to see gold do. We know what we are looking for inside the XAU. What you and I are looking for inside of gold is at least for it to close above Stevie's red line, 1282.10 as we speak right now. That in concert, in combination with what we're looking at, that would be a beautiful thing. That's not the only thing that we need to see. We really need to see that yen participate in this move with regard to finding a bottom. And I don't know that we have seen that yet. Let me switch over to a different set of charts out here, and we'll pop that up. And we will definitely take a look at Barrick Gold. So in the case of the yen, it, too, needs to close above its red line, and that's going to be at 0.8904. If all three of those things can happen, that's probably a huge Christmas gift to each of our elves out there. Or, I guess, they're called little people. In any event, those are the three things that you're looking for just kind of a perfect confirmation scenario. Inside of Barrick Gold, though, let's go take a look at a request for Barrick Gold. Let's look at our three different time frames out here. At least those three different time frames. Maybe on another chart, we can go take a look at the daily chart and see what that says. So in the case of Barrick Gold, what are we going to find out here? Let's see here. So I'm actually just trying to paint something on my other chart here for you. So much like we looked at, because this is one of the things that you and I are looking for. If the XAU is showing us a bottom, so too should the numero uno weighting. I believe it's numero uno weighting, or one of the top 5 weightings inside the XAU. And you can see here's your A to B equals CD to the downside. Now, this is not a 1-to-1. This is a 1-to-1.272, which you would expect. Today's candle, right now, as we take a look at it, my favorite polar bear, is a hammer candle. So you have a hammer candle here, a hammer candle, potential hammer candle here, potential hammer candle inside the XAU. So this is really just confirming what we really looked at inside the basket of mining equities out here. With regard to wave counts on the way down, let's see where we're at. You are not at a seventh wave. That doesn't matter. Just looking to see if, in fact, we had all of the same patterns lined up. Price is above Stevie's red line. That at least says if you get the confirmation of a bullish reversal candle, you can at least have counter trend rally. Counter trend rally on this chart says you look at about 1575. On the other charts, you're looking at 1423 as the first next place. That's going to be the top of a weekly box out here. 1471 is the top of a weekly profile. If we look at what Barrick Gold has done on a weekly basis and do a little analyzation out here, it's the swing point of the week that began December 12th. Interesting, December 12th was a bottom inside of Barrick Gold. This is not December 12th, but it is December 4th. Could it be that easy out here that Barrick Gold likes to make a bottom in December? I don't know. But the volume there was 131 million shares back the week of December the 12th, and that was tested out here last week with 62 million shares going against 131,000 shares. Polar Bear, are you suggesting that Barrick Gold has formed a bottom? Because if you are, I'd absolutely have to agree with you. But the key is going to be, what does today's candle session look like out here? And I'm referring to both on Barrick Gold as well as inside of the XAU. So thank you for pointing that out to us, because that looks pretty darn good. On the monthly chart, if you were to take a look at the monthly chart, here's your big breakout candle session. The month of April 2016, 400 million shares. Last month you came back with less than 200 million shares. Not a lot of energy to bust it down, that's for sure. Steve Rhodes with TFNN. Great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we don't have any questions that have come in, so I was searching for I just decided to search for a page, see if I could find it. Change here. Why? That's not it. That's not it. That's not it either. Bummer. Well, the chart that I was looking for, I'll just tell you a story. It's a good story, by the way. Now, the chart I was looking for, I wonder if it's already out here. Maybe that could be it. The chart that I was looking for was my one-day rate of change chart. The spot volatility index right now is trading at 1030. It's down 9.97% out here. And if that gets down to a minus 10% or lower, less than minus 10%, those can identify themselves as initiation days, which is that would be an initiation move inside the S&P 500, which is only up 0.5% right now. So again, long term, things look very, very good, very promising. We're in that favorable seasonal cycle, that is for sure. December out here, and just watch the spot volatility index. I think that number, that 50-day number that we took a look at, I think that's the key. If we look at a couple of stocks here, they're moving just in the last minute. Maybe one stock, AutoZone. Let's go see what it's doing. It's up a nice 25 buckaroonies out here. So AutoZone has taken. Here's where gaps are our friends. And they really are friends no matter what, because they provide us with great levels of support or resistance. In this case here, the resistance would have been at 657.99. There was a gap to the downside with 2.9 million shares back on May 23rd. That level was taken out a couple of days ago. November 28th, was done with light volume. Nonetheless, that now becomes support. Old resistance, which was 657.99, is new support. AutoZone is in the zone. It's headed to its next gap out there, that next friendly area at 754.10. Another 50 bucks higher. Folks, stay tuned. Your favorite polar bear, certainly my favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll see you back on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.